So first one is chapter number 6. Okay, first question is on on the audit report chapter, that is chapter number 6. Okay, so I'll read out the question. See, always when you read, when I read the question, I would request you guys to pay attention to the question. I always tell that, question is more important than the answer. Therefore, you need to understand what the question is and then accordingly answer the question. Okay. And today, all the three questions of today are very fantastic questions, in terms of understanding the concept, in terms of answering, in terms of approaching the answer and approaching the question and the answer. Okay. All the three picked up are very, very good questions, right? So first question, Mr. Hemant Ramse was appointed as the engagement partner audit of Sheta Limited for the financial year 2021 on behalf of Ramsey and Associates. So Ramsey and Associates is the audit firm and Mr. Hemant Ramsey is the engagement partner. And what is the name of the company? Kshetra Lab for the financial year 2020. Okay. Mr. Vishay Tyagi was appointed as the engagement quality control reviewer by the firm for the said audit. Again, I repeat, Mr. Vishay Tyagi was appointed as the engagement quality control reviewer by the firm for the said audit. Now, before I go to the next part, I want you guys to tell me what is an engagement quality control reviewer? Who is an engagement quality control reviewer? Yes. Who is an EQCR, engagement quality control reviewer? What is his job? Yes, anyone? Engagement quality control reviewer? No one? Then I would like to answer this question. So before going to the question, we need to know what the terms mean, right? So engagement partner. Does anyone know what is an engagement partner? Who's an engagement partner? Who's an engagement partner? Yes, anyone? No, that I know. Hemant is the engagement partner. What do you mean by an engagement partner? What do you mean by an engagement partner? Not in context of this question. What is the general meaning of an engagement partner? He is responsible for the audit, right? So the partner who will sign, and he's very good. The partner who will sign, and he's responsible for the audit. Very good. Both the questions, both the answers are very good, right? So the person who generally signs the financial statements of the company on behalf of the firm, okay, a partner who should also be a chartered accountant, right? He is an engagement partner. Very good. Now, what is an engagement quality control review? This is very, very important, right? As per SA 200, SA 220 or SQC1, right? Any listed company, okay, should also have someone called an engagement quality control reviewer. This is governed by the provisions, not provisions. I would say this is governed by SQC1, Standard on Quality Control 1, where it said all listed entities should definitely have one engagement quality control reviewer. Now, what is the job of an engagement quality control reviewer? Sir, there is an engagement team. You know what is an engagement team? An audit team is there. There's an engagement partner also. Very good. Now, a quality control reviewer is someone who reviews the work of the engagement team simultaneously as the audit is happening. Okay, and who kind of gives his comments on the reasonableness, okay, of the decisions, of the conclusions reached by the engagement partner. So he's like an audit committee to the engagement partner. Are you able to understand? So there's a mandatory provision by SQC1 that an EQCR should be there for every listed entity audit. Okay, an EQCR is a person who kind of goes through the documentation done by the engagement team during the course of audit, and also understands whether the procedures performed are as per the standards on auditing, or are there any additional procedures that have to be performed, or if there are the rationale, the basis for conclusion reached by the auditors, by the engagement team, whether it is proper and whether it is appropriate. That is the work of an engagement quality control reviewer. Right? So whenever an EQCR is there, it is most likely that it is a listed entity. Yeah? Clear with this? Now, During financial year 2021, there was an implementation of an ERP system in a phased manner. Please understand, in FY21, it is an implementation of ERP in a phased manner in Kshetra Lab Limited, due to which some of its business processes got automated. So there's an ERP implementation and a business process got automated. As a result of the implementation of such a system, there was a significant effect on the auditor's overall strategy. Mr. Hemant is the engagement partner. Discuss the implementation of such a system with Mr. Vishay. Vishay is the EQCR, right? And also told him that such a matter may be a key audit matter to be reported in the audit report. So the question is around key audit matter, right? Next, Mr. Vishay considered the significance of such matter, but however, he was of the opinion that such a matter did not appear to link with the matters disclosed in the financial statement, and so there was no need to disclose such a matter as a key audit matter. Whether the contention of Mr. Vishay is proper with respect to the matters to be communicated as the key audit matter. Yes. So what is the question, sir? So the question is, there is an implementation of an ERP happening, which is having, and because of which a lot of processes are getting automated, right? And because of that, a significant effect on the auditor's overall audit strategy. Okay, now whether this matter should be a key audit matter is a contention. Mr. Hemant, who is the engagement partner, is saying yes, it should be. Mr. Vishay is saying no, it should not be, because this is nowhere disclosed in the financial statements of the company. Right? ERP implementation is nowhere linked to any numbers or no. It's a process that is getting automated. That's all. There's no linkage to the captions which are whether the share capital or income or something, whether it will have any effect, whether it will have any direct link. Answer is no. Then it should not be disclosed as a key audit matter. That is the question. Now we need to say whether this matter has to be disclosed, irrespective of the fact whether it is having any link to the numbers disclosed in the financial statements or not. That is the question. Understood the question? Any answer? Any answer for this question? Any answer? How will you start the question? How will you answer? How will you start the answer? Yes. How will you proceed? What is the first thing that you will? What is the first thing that you will say? You will write. We all know it is a question from SE 701, right? So what is the first question? What is the first thing that you will say? Yes, anyone? What is the first? Any guesses also? It's okay. I mean, you don't have to be right. Whether it will affect the opinion, the chat may. Whether it will affect the opinion, it'll affect the opinion of the use of financial statement. Okay. So how will you start your answer? How will you start? Now this is a question, examination question. Okay, given your question paper, imagine how will you start your answer? How will you start your answer? So always, whenever when a question is comes on, please remember this very important thing, right? Always any question that comes, okay, which relates to a standard, right? You need to start by naming the standard. Okay, always the two magical words with which you need to start is as per. What are the two magical words? See, that's how the answer is started. As per SA 701, because that's the name of the standard. As per SA 701, communicating key audit matters in the independent auditor's report. Always start by naming the standard, right? Then you have to define what is a key audit matter. Okay. Now there are three determinants. When does a matter become a key audit matter is given under the standard. SA 701 talks about when are the three, what are the three criteria, okay, for determining a matter to be a key audit matter, right? First thing, you need to define what is the key audit matter. It is of significance in the audit of current period financial statement. It is out of the matters communicated to post-status governance. That is something which we all know. Now, it is there are three important criteria in determining key audit matters. One is it should be of high risk. The risk of material misstatement should be very, very high. Point number one. Point number two, judgment, okay, high judgment area, okay, estimation uncertainty is very, very high. That is another one. Point number three is significant transaction. It is a significant transaction that has taken place during the current period. right? So these are the three matters which will have to be written. When will you determine a particular matter to be a key audit matter, right? Area of high risk of material misstatement or significant risk as identified in accordance with SA 315. Significant auditor's judgment relates. So first one is high risk of material misstatement. This is all given in the standard itself. This is very, very important. We all need to know. When you study SEs, it's there in your study material also given by SCI. It is also there in the standard as well. Okay, so these are things which we need to, if you're studying this 701, this thing is something which we cannot miss out. This is the core of the standard, right? So high risk of material misstatement, significant auditor judgment. So significant judgment is involved. So when the significant judgment can be involved in applying the revenue recognition, in applying warranty provision, in applying any provision for doubtful debt, high judgment is involved. Okay, it's not a straightforward thing, right? And having a high estimation uncertainty. That's what I said. When estimation uncertainty, what is estimation uncertainty? Estimation uncertainty, for example, you are providing for warranty expenses in the books, right? Now you cannot provide for warranty. It's an estimate. It's a provision, right? It cannot be accurate. You cannot predict this is going to, because expense is something today the customer is buying the product today. We do not know the product whether he'll give it back to us and what is the repair and how much expense we'll have to incur. So basis the past trend, basis certain assumptions, I will be providing for warranty. Basis the contractual terms agreed with the customer, right? So I'll be providing for warranty expenses. You understand what I am trying to say? So depending upon whether the estimation uncertainty is with how much accuracy you're able to predict the provision, how much accuracy you're able to provide for any provision, right? So if your accuracy levels are high, your estimation uncertainty is low. Okay, if your accuracy levels are low, no, I don't have enough data, I know I'm just providing on an ad hoc basis, then my estimation uncertainty is high. If my estimation uncertainty is high, my risk of material misstatement also becomes high. That's the logic, right? A third part, effect on significant events or transactions. Significant events or transactions. Are you able to? So the effect on audit of significant event or transaction that occurred during the period. So that is it. So these are the three parts, important parts in determining the matter is a key audit matter. What is the first part? The first part is high risk of material mistake. Any question on 701, if they ask you how to determine a key audit matter, you need to say these three things: high risk of material misstatement, significant audit judgment having a high estimation uncertainty, and the third one is significant events or transactions that occur during the period. If any of these 3 points are there, then that matter may become a key audit matter. Are you able to understand? These 3 points should find a place in your answer if the question is pertaining to determining a key audit matter. Clear? Now the question, now this is what we've defined. So if you write till this one, at least 1 or 2 marks are guaranteed. 1 or 2 marks definitely is what you will get. Okay. Now what we need to kind of explain is, Mr. Vishay is saying that since it's an ERP implementation, it is not having any direct impact in the amounts, direct link that did not appear to link with the matters disclosed in the financial statement, and so there is no need to disclose such matter as the key, right? So that is the contention of Mr. Vishay. Now that as per SA 701, it is not necessary that a particular matter may have a direct link to the financial statement. Okay, it does not appear to link with the matters disclosed in the financial statement. No, it may not. It may not be directly linked to the matters disclosed. It could be indirect also. If it is significant, then it will still be determined to be a key audit matter. That is what is the standard also saying. The auditor shall determine which of the aforesaid matters considered were of most significance in the audit of financial statement of the current period, and therefore are the key audit matters. The aforesaid considerations focus on the nature of matters communicated WG. Such matters are often linked to the matters disclosed in the financial statements and are intended to reflect areas of the audit of financial statement that may be of particular interest to intended users, right? So this is a general thing. However, the facts that these considerations are required is not intended to apply that matters related to them are always key audit matters. Rather, matters related to such specific consideration, the key audit matters, only if they are determined to be of most significance in the audit. Okay. Now, if you read the question, see the question saying there was a significant effect on the auditor's overall audit strategy. So that means this is a matter which is having a significant effect on the audit itself, right? There is an ERP implementation because of which multiple processes are getting automated. It is having a significant effect, though it is not directly linked to the numbers in the financial statement. It is indirectly linked and it is having a significant effect. Therefore, this matter has to be disclosed as a key audit matter. Accordingly, such a matter can be considered as a key audit matter if, according to Mr. Hemant, such a matter required significant attention that had affected his overall audit strategy. Thus, the contention of Mr. Vishay is not proper, as a matter that did not link with the matter disclosed in the financial statement can also be considered as a key audit matter if it required significant attention of the auditor, which had an impact on its audit. Yeah. So the point here is the question is not on whether question is on whether the matter has to be disclosed as a key audit matter, irrespective of the fact whether it is directly linked to the numbers in the financial statement. The answer is, even though it is not directly linked, but it is having a significant effect on the audit, okay, on the overall audit strategy, it has to be disclosed as a key audit matter. Next question is a simple question on, as I told you, corporate governance. It's a simple question on corporate governance. Sir, if you know corporate, I told you when I explained you about chapter number 7, corporate governance, if you know the regulations, you will be able to answer. If you don't know the regulations, you will not be able to. It's like a hit or a miss. Either you do a sixer or you get out. That's all. You cannot, there's no in between line, because there's no vagueness in these type of questions. If you know that this is the regulation, you have to just write the regulations, apply the regulation to the answer, form a conclusion. That's all. There's nothing. There is no concept of vague answer, because therefore studying this becomes very easy, and it's all the more that you should not leave this chapter for the examination, because it's a very direct question that you will get. Yeah. Now, Kayas Limited is a public company which got listed on BSE and NSE in the financial year 15-16, and is amongst the top 500 listed entities on the basis of market capitalization. Okay, this information is very important. JP Bhuj and Co., a CA firm, has been appointed as a statutory auditor for the financial year 2021. Mr. Pankaj Bhuj was assigned its audit as an engagement partner, and he was verifying the composition of the board of directors because of some changes in the same, right? So who is the auditor? Mr. Pankaj Bhuj. What is the audit firm? JP Bhuj. What is the name of the company? Kayas Limited. It is a listed company, right? It is listed and it is in the top 500 listed entities. It is the top 500 listed entities. Okay. The present composition of the board of Kayas Limited is as follows. So the question is still continuing. There are 9 directors, out of which 4 are non-executive and 3 are independent directors. The board has only one woman director, and she is an executive director. Very important. Right? Mr. Madhusudan Mehra has been appointed as a non-executive chairperson of the board. Mr. Madhusudan Mehra has been appointed as a non-executive chairperson of the board. He is the brother-in-law of the managing director of Kayas Limited. Whether present composition, now that's all. This is the question. I mean, this is the composition. How many directors are? 9 directors are there. Okay, there are 9 directors in the board, out of which 4 are non-executive and 3 are executive. 3 are independent. So 4 non-executive, 3. So 4 plus 3, 7. So the remaining 2 are executive directors, right? There is one woman director and she's an executive director, right? And the chairperson is a non-executive person, but he is the brother-in-law of the managing director. So he is, whether he's a relative or not, we need to understand. Now, whether the present composition of the board of Kayas Limited complies with the requirement of the provisions of SEBI LODR regulation. Now, this is the question. Now, okay, let's forget about the answer. I want to understand, since this session is aimed at how to present the answer, right? If such question comes in the examination, I want you to tell me how you will present the answer. What will be the structure of your answer? What will be the structure of your answer? Yes, anyone? What will be the structure of the answer? I told you this in the last class also. When we met last Sunday, I told you how you need to present your answer. As per the relevant provisions of the Companies Act. Okay, but this is not Companies Act. This is SEBI LODR regulation. This is not Companies Act at all. Right. So as I told you, first you need to give the you need to give the regulations. Okay, what are the if you know the regulations, then only you'll be able to answer this question, right? First, you need to write what are the LODR regulations, okay, with respect to composition of the board. Okay, then you need to say, okay, boss, then you need to give facts of the case. Okay, that is basically these two lines, right? There are 9 directors, so on and so forth, and then you need to apply those regulations on the facts of the case and give the conclusion saying that whether the composition is as per the provisions of LODR regulation or it is not as per the provisions of LODR regulation. Are you able to understand? So that is what has to be done. That's how you need to present your answer. Okay, someone is telling firstly define the provisions. Yes, you need to define the provisions. You need to write what are the facts of the case, which is basically the question itself, and then you need to apply the provision on the facts of the case, and you need to give a conclusion. So facts of the case, literature, conclusion. 3 parts should be there in the answer. Then only it's a wholesome, complete answer. That's the way to do it, right? Now let's go on to the answer. Now, anyone knows what should be the ideal composition? What is there in LODR regulations? Yes, anyone has it in their head? What should be the LODR regulation? Yes. Hello? No one? And no one has gone through the main recording? How does this work? I mean, you first have to go through the main recording, right? And then you have to attend this session. Or is it ulta? First you'll attend this session and then you will go and study the recording. How does this work? Because without studying the main or going through the main recording of the class, then this entire session that you are going through as part of your RTP, this is RTP question. So first you need to know the content and then you need to come and attend the RTP class. Right? Anyway, so what does the LODR regulations say? Okay, the LODR regulation says as per regulation 17 and 17A. So they are naming the regulation. Okay, they are kind of giving the names for the regulation. So this is very important. Regulation 17 and 17A of the SEBI LODR regulations, the auditor should ascertain whether throughout the reporting period, the board of directors comprise an optimum combination of executive and non-executive directors, with at least one woman director and not less than 50% of the BU comprising of non-executive directors. So what is the first condition? At least 50% have executive. Let me note that the board of directors of 1,000 listed companies, this is under top 500. That means it is forming part of top 1,000. Yes or no? This is under top 500. Okay. So up to at least top 1,000 listed entities, okay, shall have at least one independent woman director. Not just women, independent director. Question says that women director is an executive director of the board. So that since it's an executive director, that woman director is not an independent director of the company, right? So if the independent, right? The auditor should audit whether the chairperson of the board is a non-executive director. At least 1/3 of the board should comprise of independent directors. At least 1/3. So there are totally 9 directors. At least 1/3 means at least 3 directors should be independent directors, right? So the auditor should also verify that whether the chairperson of the board is a non-executive director, right? So these are the regulations which are there. Now, going forward, the auditor should also ensure that the chairperson of the top 5 entities is a non-executive director and is not related to the managing director of the CEO. And what is the definition of the term relative? It is as per the Companies Act of 2000. Now, if you go through the Companies Act of 2013, the term relative has, what is the term relative? Father, mother, daughter, son, brother, sister. That's all. and husband, wife, and members of the HUF. Okay, brother-in-law is not a relative, though it is actually a relative, but brother-in-law is not defined to be a relative as per the provisions of that. Therefore, it is okay. Now, in the given case, Kayak Limited is a public. Now they are giving the facts of the case. Kayak Limited is a public limited company, okay, which got listed on C and the NSE in 1516 and is amongst top 500 listed entities on the Bidam market capitalization. The present composition of the board includes 9 directors, out of which 4 are non-executive and 3 are independent. The board has only 1 woman director and she's an executive director. Okay. Now, in addition, the chairperson of the board, Mr. Madhusudan Mehra, is the brother-in-law of the MD and has been appointed as the non-executive chairperson. Okay. In view of the regulation 17 and 17A, there should be 5 non-executive. Why not 5 non-executive directors? Because 50% of the BOD should be non-executive. But what are the facts of the case? 9 directors in 9 directors, 4 directors are non-executive. That means 50. What is 50%? What majority? At least 50%. Not majority, at least 50%. Right? At least half of the board should be non-executive. Now, if it's an odd number, 9. If it's an odd number, at least 5. Okay. If it's 8, then 4 is fine. 50% is okay. Are you able to understand? If it is 9, then you have to say 5. If it is 10, then 5. Okay, fine. If it is 11, then 6. Are you able to? 6 should be non-executive director. 6 directors should be non-executive director because at least 50%. Because you cannot say 5.5. No, 5.5. There's no 0.5 human being, right? So it has to be 6. It has to be rounded off to the next number, right? Yeah. So in addition, in view of there should be at least 5 independent directors, 5 independent non-executive directors, and 3 independent directors. Why 3? Because 1/3 of the directors should be independent directors as its chairperson, and the chairperson should be a non-executive director, right? Further, as the company is among top 500 listed company, at least 1 independent director should be a woman director and also should be a non-executive director. I mean, at least 1 independent woman director should be there in the board. Okay, so there is a woman director, but she's an executive director as per the facts, right? Thus, it can be concluded that the present composition of the board of Kayak Limited does not comply with the provisions of LODR regulation, as the woman director is an executive director, and there should be 5 non-executive directors, but right now there are only 4 non-executive directors. Are you able to understand what I'm saying? Clear, everyone? Any doubts in this? So only when you know, I said only when you know the regulations, you will be able to answer. I told these type of questions are direct questions. As I told you earlier, these type of questions are direct questions. If you know the provisions, you'll be able to answer. If you don't know the provisions, there is no way in this world that you'll be able to answer such kind of questions. And there's no vagueness. It's very clear. It's very clear. Clear? Can I go forward? Now, question number 3. This is a comprehensive case study type of a question. Okay, with your choose the correct answer and all that, right? Now, very nice question. Very a lot of it's a mixture of audit report and also Companies Act. Okay. Now, ULIP Limited is a public company listed on NSE since the year 2015. Okay, we have to highlight the word NSE. It's listed with the National Stock Exchange of the company. Okay, SRS company, SRS & Co. is being appointed as the statutory auditor for the financial year 2021. And Mr. Raj is appointed as the engagement partner on behalf of the firm to conduct the said audit assignment, including the conducting of limited reviews and other statutory assignments. Okay, so NSE listed, public company, of course. SRS is the auditor. Engagement partner is Mr. Raj, right? Mr. Raj is conducting LR for second quarter and doing the same while adhering to the responsibilities as conferred upon SA 250. Consideration of laws and regulations in audit of financial statements. He evaluated the implication of non-compliance. Okay, now for that we need to know what is SA 250. Okay, if we don't know SA 250, then it's going to be difficult to understand the question. Anyway, he evaluated the implications of non-compliance in relation to other aspects of audit. Now, we need to please highlight this word, other aspects of the audit. It's a very, very fantastic question. If we know the concept only, we will be able to answer. If we don't know the concept, such questions cannot even be answered in the examination, right? It's going to be dreadful paper, right? So we evaluated the implications of non-compliance in relation to other aspects of the audit, not other aspects of the law. So the non-compliance is related to certain aspects of the audit, right? Including the auditor's risk assessment and reliability of written representation, and concluded that the withdrawal from engagement was necessary in the given circumstances. So he wants to withdraw. So because there was some non-compliance with certain aspects of the audit, he thinks that he has to withdraw. Withdraw means he has to resign from the audit, right? uh, After seeking legal advice, even though the non-compliance was not material to the financial statement, but as management of those charged with governance refrained from taking the remedial action that he considered appropriate in the circumstances, such a withdrawal was not prohibited by any law or regulation. Right. So the answer. So even though the non-compliance of the aspect of audit is not very material, okay, it is not very material. He is resigning because the TCWG or the management is not taking any remedial action against that particular non-compliance. Okay, and the withdrawal is not prohibited by any law or regulation. Okay, now the next part of the question. Mr. Raj, on behalf of SRS and company, brought to the notice of the audit committee of ULIP Limited all is concerned with respect to the proposed resignation along with relevant documents. Mr. Raj, on behalf of SRS and company, brought to the notice of audit committee of ULIP Limited all is concerned with respect to the proposed resignation along with relevant documents. After issuing the necessary reports required in the circumstances, SRS and company gave its resignation letter to ULIP Limited at 1 p.m. on 2021. Official email ID contains the detailed reasons for the resignation. So what is the resignation date, sir? Resignation date is 20th of November. Who is giving the resignation? SRS and company is giving, SRS and co is giving the resignation. What is the date? 20th November is the date of resignation. This is very important, right? Forward to the stipulated authority. ULIP is the name of the company. At 4 p.m. On 21st of November 2021 via his official email ID. So when did he resign? 20 November at 1 p.m. So why the time and all is important? LODR regulations. LODR regulation, that is the time is important. When did the company inform the stipulated authority? Who is the stipulated authority? That is another question, right? At 4 p.m. on 21st November, they informed. Question is not yet. SRS and company filed a statement with respect to its resignation statutory audit and prescribed form with ULIP Limited, who is SRS, the audit firm, right? Prescribed form with ULIP Limited and the registrar on 15th January. Sir, what is this thing? 15th January, respectively, after receiving a notice from Ministry of Corporate Affairs. For the purpose of filling the casual vacancy in the office of the auditor, the audit committee of ULIP Limited gave recommendation of an audit firm for being appointed as statutory auditor. The board disagreed and referred back the recommendation to the committee for reconsideration, citing reasons for such disagreement. However, the audit committee, after considering the reasons given by the board, decided not to consider its original recommendation. So the board of ULIP Limited, after recording the reasons for disagreement with the committee, appointed Chavda and Co as its new statutory auditor on 15th December 2021. So the dates are very, very important. So again, just to explain, okay, the date of resignation is 20th November, right? The date on which the authority was informed by the company was 21st of November. Okay, the date on which the auditor filed, the form with MCA, the resignation form, as per the provisions of Section 140, on 15th of January 2021. Okay, then the ULIP Limited, ULIP Limited has to fill the casual vacancy, as per the that was filled 15th of December, right? Appointment happened by the board on 15th of December. Question is not yet over. Such an appointment of Chavda and Co was also approved by the members of ULIP Limited at the duly convened general meeting on 3rd of February 2022. Okay, so this is the facts of the case. So, sir, if I were to understand quickly, if you can note it down on a piece of paper, or I can just write here, sir, date of resignation date of resignation is 15th February. Sorry, 20th November. Sir, date on which the stipulated authority was informed. Stipulated authority was informed was 21st November. Right, sir. Date on which the MCA form was filed by auditor was 15th January. That's what is given in the question. We check. Yes. Date on which the casual vacancy was filled by board. Sir, that is 15th December. Sir, date on which the general meeting was convened, EGM was convened, for appointment, for appointment of new auditor. That is 3rd February. Facts. So when asked, no kind of summary of this, quickly you need to, because you cannot waste your time, again rereading, right? So quickly make a summary like this. Okay, whenever because there are so many dates involved here, so it is better to kind of, because definitely questions will come. The questions which will be asked will be based on this. So quickly in your question paper itself somewhere, make a summary of this. Okay. Now, first question, whether the reasons for withdrawal from the engagement partner by SRS and Co. can be considered justifiable in the light of the fact that non-compliance is not material to the financial state. In the fact of the it is not material. Okay. So whether he can from the engagement. So now let's look at the option. Yes, such a withdrawal was not prohibited by law and regulation. Yes, as the auditor not has obtained legal advice for the same, and also such withdrawal was not prohibited by law and regulation. Yes, in exceptional circumstances, the auditor may consider for such withdrawal, provided that such a withdrawal is not prohibited by law or regulation. Last option, yes, as it does not matter whether non-compliance material or not, management or those charged with governance should not refrain from taking remedial action with the auditor as considered necessary, provided such a withdrawal is not prohibited by law or regulation. Sir, if such a question comes in the examination, it is very difficult to answer, because all answers are yes. But we need to give a reason, because that's what the question is, justifiable. Now, generally, practically, or given by SA 240, okay, and 250. This is not from SA 250. This is from SA 240, to be honest, right? This, the auditor will consider withdrawal only if it is only the matter material. Okay, and definitely it's limited by law regulation. The auditor will consider only if that is the case. However, certain times, in exceptional circumstances, if he thinks no, boss, there is a requirement to withdraw because management is refraining from taking any remedial action. In exceptional circumstances, if it is not prohibited by law regulation, I will go ahead and I will seek for withdrawal. So the answer is 3. Option number 3. In exceptional circumstances, the auditor may consider such withdrawal, provided such withdrawal is not prohibited by law or regulation. Right? Now, question number 2. Continuation of question number 6 above. If it is assumed that auditor was prohibited by law, now assuming that he was prohibited by law regulation from such a withdrawal from the engagement, then how would he have reported the non-compliance in the audit report? A fantastic question asked by the institute. If assume, now in the facts of the case, it is said that there is no withdrawal by law regulation. If you go back and if you study this question, it says such a withdrawal was not prohibited by law or regulation. Last line. Okay. However, if at all, if we assume that there is a prohibition, you cannot resign. Companies Act says, or LODI regulation says, or SEBI says you cannot resign. In that case, how will you report the matter in your audit report? So now this is chapter number 6. How will you report the matter? Yes, any answer? The question answer options are given. Basis for qualified opinion, other matter paragraph, emphasis of matter paragraph, or basis for disclaimer of opinion. What will be the answer?
Mr. Abbas?
Yes.
Yeah, so sorry for the
What will be
inconvenience.
the answer? Nitesh, I just saw your message. Yes, we will close at another 5 minutes. That's it.
Okay, fine. Okay.
I mean, I'm at the verge of closing this. Another 5 minutes. I just saw your message. I'm sorry.
Fine. That's fine.
Yes. So the answer here is being other matter paragraph. Why is the other matter paragraph? Because only if you know what is other matter paragraph, you will be in a position to understand it. Otherwise, it becomes very difficult, right? So here the answer, the question says he evaluated the implication of non-compliance in relation to other aspects of the audit, right? So what is other matter paragraph? Relevant to the user's understanding of the audit, auditor's report, and auditor's responsibility and the auditor's report, right? So this is something related to audit, and therefore it will form part of the other matter paragraph. So if tomorrow, if there is a problem in terms of, there is a problem in terms of prohibition, where the law is prohibiting me from from withdrawing, then because the non-compliance is in relation to certain aspects of audit, okay, is in relation to certain aspects of audit, therefore it has to be reported as part of other matter paragraph. Now this question you will be able to understand only if you have studied SA 706. Otherwise this question you will not be able to understand, right? Next question. ULIP Limited was required to disclose to which authority the detailed resignation reasons for resignation of the auditor, and by what limit as per LODR 2015. Now, again, LODR 2015 prescribes that with the NSE, because you are listed with the National Stock Exchange, with your respective stock exchange, you have to, when an auditor resigns, you have to, within 24 hours from the time of resignation, you have to report it to the NSE, right? So he resigned on 20th of November at 1 p.m. So by 21st of November, 1 p.m. with the NSE, you are required to disclose. So the answer is point number 3. Such reasons were required to be disclosed to NSE till 1 p.m. 21st of November 2021. That again, if you know LODR regulation, you will be able to answer. If you do not know, you will not be able to answer. Now, the next question, now they are bringing Companies Act, right? What could be the penalty specified under Companies Act 2000? That could have been levied on SRS and Co. for failure in filing this with respect to resignation within the prescribed time limit with ULIP Limited and the registrar respectively if its remuneration was rupees 40,000. Now, this is section 140 subsection 3 of the Companies Act, where within 15 days from the date of resignation, you need to file a form with the MCA. If you're not filing a form with the MCA, there are certain penalty provisions. Now, what are the penalty provisions? 50,000 auditor's remuneration, whichever is less, and rupees 500 every day, okay, until the default continues. Now, going back, what was the date of resignation? 20th November. So by when they were 20th November plus 15 days, be approximately 15 December. But when they have filed the form, they have filed the form only on 15th of January. So they are 1 month late. So minimum fine is 50,000 or auditor's remuneration, whichever is less. So what is the auditor's remuneration? Yeah, 40,000. So 40,000 plus 500 rupees from the due date. What is the due date? 15 December is the due date. Now, from 15 December to 15th Jan, you will have to calculate, multiply into 500. Are you able to understand? That is approximately around 20th November plus 30 days is 20th December, right? So 20th December to 15th January. So approximately around 25 days. 25 days into 500, if you do add it with 40,000, your answer will be 52,500. So, sir, you need to know the penalty provisions also. Again, this question is completely based on regulation. If you know the regulation, you will be able to answer. If you don't know the regulation, you will not be able to answer. The answer is 52,500. That is 40,000 plus 25 into 500 will be 50. That is 12,500. So 40,000 plus 12,500, 52,500 will have to be paid, right? Now, the next question is on what was the last available date with the board of ULIP Limited for filing the casual vacancy in the office of the auditor, and by what last date the general meeting for approving the auditor as appointed by the board should have been made in accordance with the provisions of the Companies Act 2013. right? So again, section 139 subsection 8, provisions of casual vacancy will have to be followed. So if there's a casual vacancy, the board will have to fill the casual vacancy within 30 days, of the date of resignation of the date of casual vacancy. What is the date of resignation? 20th of November. What is 30 days? 20th of December. So first start this 20th of December. Now, if it's a cause by resignation, then a general meeting will have to be conducted. Now, general meeting is 3 months the date of the meeting. 3 months from the date of the board meeting. What was the date of board meeting? The date of again, you need to know what are the facts of the case. The date of board meeting was 15th of December. So within 3 months, 3 months is December, 15 Jan, 15 Feb, and 15 March. 15th March, right? So the answer is 20th December and 15th. The 20th December being the last date for filling the casual vacancy by the board, and 15th March 2022 being the last date for convening the EGM for appointment of the statutory auditor in to fill the casual vacancy. So that is the answer. The entire question and the entire answers, okay, are completely dependent upon or based upon the the fact that you need to know the regulation. So it's a mixture of the audit report, it's a mixture of LODR regulation, it's a mixture of the Companies Act. It's a fantastic question given by the institute. Only if you know the answers and if you know the regulation, you'll be able to answer. Otherwise, it is not possible to answer this question. Yes. So that is it for today's session.